Hello everyone, welcome to Bald Guy Money, and on Tuesday, September 30th, so about 2 weeks ago, I came on here to warn you all that big money players were coordinating price slams at specific opportune times in the market with the goal of entering gold and silver because they do not have enough of it. And the message in that video was, do not be fooled by volatility in the precious metals market. They want you to sell your gold and silver so they can buy it up. Now, in that same video, I told you that we would likely make a recovery from any price slams by October 9th at the latest, once China came back from their holiday. And since then, we've made huge moves up for both gold and silver, with silver even piercing $50 an ounce for the first time ever, exactly on October 9th. And we remain above $50 an ounce for silver at the moment of making this video, despite at least 5 separate coordinated slams, including the one we are seeing today. And these slams, followed by quick recoveries driven by big money entries, have pushed silver up to the 6th position on the top 10 investable assets list, excluding real estate and bonds, of course, and it is now challenging Google for the 5th spot on this list, as gold and silver combined now represent nearly 58% of the total value on the list, nearing its high from back in April of this year, showing us that despite a frenzy in tech and AI, gold and silver are at the top of the menu when it comes to major institutional money, and that's despite the volatility and potential for temporary pullbacks in both metals and miners that I have been warning about as the bull market heats up. And that's exactly what I want to dig into in this midweek video, starting with clear proof that even at record nominal prices, gold and silver remain undervalued and underinvested. Once that's covered and once we've reviewed some of the price targets I've shared here on the channel, I want to show you all why I left 90% of the money I had in mining stocks, using one of the stocks that I own to show you just how much upside potential these mining stocks have, as governments around the world focus in on what can only be described as a resource war. Now, just before we dive in, I want you all to know that this bonus midweek video has once again been made possible by investing.com and their amazing market analysis tool, Investing Pro, which I use to track my mining stock portfolio. I also use it to compare the stocks I hold versus other high-quality mining sector players in order to identify undervalued stocks and additional investing opportunities, like the one I showed you all 2 weeks ago here on the channel when I showed you Thor Explorations, which the investing.com platform told me was a good, small-producing mining company that was undervalued, and since making that video, it has gone up more than 17%, and as an analyst, I can tell you that this platform is the real deal. So if you want to supercharge your investing strategy or just verify what it is your favorite YouTubers are saying when they promote mining stocks or give you price targets, please sign up for investing.com's Investing Pro package. And when you sign up now, you get 50% off plus an extra 15% off on top of that when you use my link. But the deal ends at 12 p.m. New York time on October 16th. So sign up now, because if you're investing thousands of dollars in metals and miners, you shouldn't be doing it blind, and this tool is a pair of glasses that helps you see things clearly. So jumping in, I am saying that gold and silver, despite being up massively in 2025 and at nominal all-time highs, are still undervalued and underinvested at a time when the stock market is overvalued and overinvested. Now, to give you an idea of what I'm talking about, here is an image I shared with you all 2 weeks ago, and it comes from top-down charts, and what it shows us is that big money that often gains significant exposure to metals via ETFs only started increasing their exposure to gold in the second half of 2024 and has since stepped up their buying in 2025. That said, as you can also see here, the share gold ETFs have today as a total share of all US listed ETFs is slightly less than 2%, meaning that allocation is about 4 to 5 times smaller today than it was in the period of biggest gains for metals between 2009 and 2011, and is more or less on par with what allocations were back in 2006. Once again, strengthening my argument that we are somewhere in the 2003 to 2006 period for gold and silver right now, with the biggest gains still ahead of us, as gold, when measured on a per decade basis since the collapse of the Soviet Union, which, as I've said in the past, ushered in about 20 years of confidence in US treasuries as countries around the world sold their gold reserves to cozy up to the winner of the Cold War, is still underperforming its price gains from between the 2000s to 2010s, when central banks started to pivot back to gold and even became net buyers again, with a strong case to be made based on this data here on the screen that over the next 4 years, we could see a minimum average price of $5,500 an ounce for gold. Now, in the case of silver, which is not only growing in demand due to industrial needs, but also making a comeback on the investment side of the equation, with the Saudi central bank adding silver to their balance sheet back in August, the potential for silver to skyrocket hasn't been this high since the end of the gold standard in 1971, as the metal has a lot of ground to make up for due to massive price underperformance on the backdrop of rock-solid demand and supply tightness, with this data here suggesting that an average price for silver over the next 4 years could be in the neighborhood of $89 an ounce. Now, as a small update to what I covered on Sunday, that doesn't mean we have to make a straight shot to much higher levels from here, as the backwardation issue I highlighted in that video, and please go back and watch that video if you haven't seen it yet, but that issue is getting smaller as I am recording this video. And that suggests that the large bullion banks and refineries are likely cooperating to a certain degree with the LBMA to ease the supply issues we're seeing that caused spot price to rise so high above the futures price. And although this chapter of the book isn't closed, and it likely won't be closed this week, it will probably be closed in about 2 or 3 weeks, it tells me that everyone watching this video should be prepared to buy pullbacks in both gold and silver, because as I warned on Sunday, they will only be temporary, and I fully expect us to be at remarkably higher prices on both metals in 2026. Now, with those average prices covered, that leads me into this video's viewer question, or maybe I should say questions, because Richard Hauser and Martin Moran, hello gentlemen if you're watching this video, recently asked me if I think the current run that we've seen in mining stocks is sustainable or if it's too late to get in. So grabbing onto those two prices I just shared, which were $89 an ounce for silver and $5,500 an ounce for gold as sustainable average price levels for the next 4 years, let's see what the value of one of my longtime mining positions will be, assuming this scenario plays out as I expect it to. And since silver is such a hot topic right now, we're going to look at Pan American Silver, which is already up nearly 100% in 2025, and we're going to see what to expect from the stock's price if silver hits again and stays at $89 an ounce. And to help me with this analysis, I am using the Investing Pro Warren AI tool, which has access to company financials and trends and can break the numbers down better than any other AI to give me a realistic picture of what to expect. And let me add that you can see my prompt for the AI here on the screen. And if you have access to this tool, you can experiment with prompts of your own using your own assumed inflation rates or your own price targets if you think $89 an ounce is, for example, too low. But this is the prompt we're using for now. And what Warren AI suggests after looking at the current price of silver, the company's margins, their earnings, and other factors is that Pan American Silver could surge to as high as $90 to $105 per share if silver reaches a sustained price of $89 an ounce, which is more than double where the stock is today, showing us that despite the major run-up in silver stocks so far in 2025, there is still a lot of upside as both metals and miners catch up with their recent underperformance, making this stock a great pullback purchase target. Now, in addition to that, let me warn you that the AI also suggests, and I love this aspect of using this tool, that higher prices for silver could attract new investment needs for Pan American Silver, including mine expansion and new mine development, which are reasonable warnings, in my opinion, that I think many experts don't factor into their numbers well enough. Now, as a result of that, the AI finally suggests that a range between $60 and $75 per share is more plausible, as long as the market believes that $89 an ounce for silver is a sustainable price level. And if it ends up happening, that means large miners still have a 50% upside left to make, if not more, and that some smaller producers, which I have left untouched in my portfolio when I took that 10% off the top, have much larger gains to come, as they usually move much faster than the large mining companies. So what I want to say to everyone who is watching who may already be invested in metals or miners or are just considering getting into them, don't mind the slams, don't mind the pullbacks, because even if we take a pause from here, even if we see a little bit of a pullback, this is a great moment for people who have not adequately prepared themselves for what's coming in 2026 and beyond to do so. Especially keeping in mind that big money is getting prepared, because smart investors know, as was covered in my video collaboration with Jordan from the Daily Gold, that the biggest gains for metals will come after the stock market crashes. And that's a major reason to stay on your purchasing schedule right now, because that obviously hasn't happened yet. So as we finish, I just want to thank Investing Pro from investing.com for making this video possible. It is a powerful platform that I really use and recommend. And if you could please click on my link below, which is in the video description and pinned comment, just to see the deal. Even if you don't buy it yet, clicking the link really helps me a lot and can lead to future bonus videos sponsored by them. So if you want to sign up, really, I think you should do it right now, because you get a double discount by using my link. And as I've shown in this video, the tool is really helpful in identifying opportunities and understanding the market. So thank you again to Investing Pro, and thank you to everyone who has made it to this point in the video. If you enjoyed this video, please remember to leave a like below. Let me know if more midweek bonus videos are something that you want to see. If so, we can see if we can make more of these videos happen. And as I say at the end of all of my videos, please remember to take care of yourselves, but more importantly, really more importantly, take care of each other. I'm wishing you all a fantastic week ahead. See you next Sunday. Goodbye.